back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, and I'm not a financial advisor. Alright guys, it's about 5:30 p.m. Eastern time, and the price of Bitcoin is currently at $110,815. Starting off here with the weekly chart, we have a day and 3 hours before this candle closes, and as we can see here, the stochastics RSI, we're on the way up. After that debacle yesterday, now we're starting to roll over. This is showing bearish signals. The RSI is also on the way down. As you can see, we have a gigantic red engulfing candle. We wick below the 21 moving average, and we actually touched almost the 50 moving average. That's currently at 100,900, and we're having tweezer tops. If we cannot revert this candle from here to tomorrow in this 1 day and 3 hours, it's spelling bad news for us. Now, as you guys know on this channel, I've always said I still believe we're in the bull market. For me, the bear market doesn't start until we pierce this 50 moving average with a closing candle on the weekly chart. But right now they're showing us some signals that maybe that might be near. That's currently at 100,900, basically 101k. So that means if we close below 101k on a weekly candle, we're going to start the bear market. Why am I telling you this? So let's go all the way back here to the last bull market. And as you can see here, when we started the first bull market, we got above the 50 moving average, that red line. As you can see, we stayed above this red line the whole time. This was that first peak. After that first peak, we got that gigantic drop down, back down from like 63 to back down to like 30,000. And as you can see, we stayed above the 50 moving average the whole time here. Then we made that second peak up here, still above the 50 moving average. We did not get into the bear market until we officially closed under the 50 moving average. This was the beginning of the bear market, pretty much you could say right here, like December 27th of 2021, we closed below the 50 moving average. Here we tried to get back above, we had resistance, and then we dropped down. As you can see, we were under that red line the whole bear market, down, down, down. This is when we fell down to about 16k. We did not get back above this red line until you could say March of 2023. I think this is when the ETFs came out. We went all the way back up to like 28k. Ever since then, this is the bull market. As you can see, look, we've been on top of that red line, above the 50 moving average the whole time, above the 50 moving average, above the 50 moving average the whole time. Here we came down to test it. This was when we were at 75k, where people were getting nervous. We've been up since then, and now here we go again to touch it. So as you can see, if we close candles below this on the weekly, this is going to be, I believe, the beginning of the bear market, and that's showing us that that's pretty much us going below 101k at the moment, because this red line is just going to continue going up as time goes on, and if we pierce it, I believe that's the end. So for right now, I have to say we're still in the bull market, and I have to still remain bullish, thinking that we're going to go up higher. As you can see, I have this pattern here. Forget it's a little cluttered because I have some stuff here on the daily, the cup and handle, this flag, but just focus on this white line here, and this white line, this is a rising wedge. Rising wedges are usually bearish, but as you can see, we've been containing ourselves in here, and even though we dropped down, we're still basically on the bottom of this wick technically doesn't count, right? So if we could just stay in here, eventually we could break out, and this would technically break us out to 155 around there, 156 if we're bullish. If we're bullish, the rising wedge does break out parabolically, but if we're bearish, that measured move is probably going to take us back down to about, I would say, like 77k, 75k again, and then we could probably go down even lower. So the only line of defense that we have in my book is this 50 moving average. We break that, then I would say that it's certain cause and we are over here. Now let's take a look at the other time frames. The 6th day, it looked like we were on the way up, but we could see we're starting to get a curve down. RSI is on the way down. All these time frames are starting to curve over. It's looking bearish. 4th day, same thing. We were on the way up, we're starting to curve over as well. On the 3 day, we're getting a big curve over. The RSI is on the way down. We're being held up by these moving averages here with this wick. The 2-day chart still has to reset. We still have a lot more way to go down here on the 2-day chart. On the daily chart, we still have more time to go down. Yesterday we had that gigantic red candle, and now we're having another red candle. It looks like we want to at least touch the 200 moving average. That's currently at 106,685. We're still above 110. We still haven't closed a candle under 110, so I'm still in the price range between 110 and 120, but if we close under 110, it looks like we would at least touch the 200 moving average. If we go below that, then we're going to be in trouble. At the 22-hour chart, you can see we still have a lot more room before this fully resets. Let's hop over to the 10-day chart. Same thing, we're dragging on the floor. 8-hour chart, we're still dragging on the floor here. here on the 4-hour chart, we lost a 200 moving average. I've been talking to you guys about this wick. Usually when we have a long wick like that, we don't make it back up. We actually come down and eat up, if not the whole wick, some of this wick. As you can see here on the stochastics RSI, we're starting to roll over a little bit. So it looks like we might be having more downside to go. What we need is for us to close the weekly candle above 101k, so we can stay above that 50 moving average, and then maybe we could come down a little bit, but we need to close those weekly candles above those 50 moving averages. I was telling you guys a couple days ago, rounded tops are not good. Rounded tops do not pay the bills, and they certainly did not pay the bills. They actually billed us with a crazy debt yesterday, and they liquidated most people. I heard that there was about $20 billion in liquidations of people leveraging and stuff like that. It's really horrible. I believe there was a lot of manipulation that was happening. A lot of the exchanges weren't working. A lot of people couldn't get into their accounts. So a lot of people got liquidated here. We head over to the 1-hour chart. Look at this. Head and shoulders on the stochastics RSI. We're still on the way down. We got rejected by the 21 moving average. I think we're gonna end up eating this wick at some point. 15-minute chart. Stochastics on the way up. We're trying to see if we could get above this 21 moving average. The first thing we need to do is get above this 200 moving average, and that's at 116,294. That seems so far away after what happened yesterday for us. And if we could do that, then we could start getting above the other averages on the higher time frames. But if we can't, it looks very dim for us here with Bitcoin. And look at the 5-minute chart as well. We're starting to get above the 21 moving average, but the stochastics are toppy. It looks like we're probably going to roll over. So right now, what's very important is to see how this daily chart is going to end up closing. And what's very, very important is going to be this weekly chart tomorrow to see how we close. And we also closed the 2-week chart tomorrow. We're still above the 21 moving average. That's at 102,597. Stochastics are also on the way down. So it's very important to check out tomorrow how the 2-week and the weekly close. That's going to give us a lot more information. All right, guys. So that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.